much for watching our podcast, Real Estate Insider, where America goes for funding. Your direct nationwide lender, actively lending in America for over 2 decades, guys. Give Angelo Christian a call or text my office, 832-431-6331. Like I said, it's where America goes for funding. We do commercial lending, we do residential lending, we do private lending, all of the above, and actively doing it for over 2 decades. And we do our live show every single week, where you can tune in, ask questions. We talk about updates in the market, the economy, real estate, credit lending, all of that stuff, everything that's going on in the United States as far as real estate and finance and mortgage. And I've been actively lending here in America for over 2 decades. So, and I talk about different topics every single week. If you guys have questions you can talk about, you can definitely ask me. So like I said, we do all different types of financing. We're located here in Texas and Houston, but we lend nationwide. We have offices all over the country. And as I stated, we do all different types of financing. We're a direct lender. You can look us up on official Angelo Christian on my website, and then also on Instagram, Facebook, TikTok, Google. You can check us out. We've helped hundreds of thousands of people, lent billions of dollars. And so we're happy to also come out with our podcast, Real Estate Insider, to get you guys the information, get you the content, and spread the word. And if you guys have any questions, feel free to, definitely ask me below if I can help with anything. Tonight, we're going to be talking about some new programs that we've rolled out. We have a new product called the DSCR Heloc. A lot of investors are super excited because they can do a second lien piggyback Heloc. Hey, Michael, what's up, man? Good to hear from you. That you can do a second lien piggyback Heloc behind your rental property, and you don't have to do a second mortgage. You don't have to refinance your first mortgage, and it's DSCR. So that's a great program that we're going to talk about. We're going to talk about some new Credit Reporting Act changes that have effect for June 2025, where medical collections will actually be deleted off your credit. So this is a huge thing that's going to impact your credit massively and should help dramatically boost your credit score, because after June 2025, any type of medical collections are no longer going to be allowed to be reported on your credit. So this is a big thing too, that I want to talk about, because it's a huge topic right now in America with people's credit scores, because the credit score makes a big difference on what you can qualify for. If you have stuff that's reporting that's inaccurate, things that are for example, charge-offs, judgments, liens, they will affect your credit score and ultimately how much you pay on your interest rate, the type of loan that you get, how much money you have to put down, all of these things. So credit is a very important thing, and we definitely want to make sure that you understand how credit works. And we'll be discussing that this evening. And please don't forget to give us a big thumbs up, share this information, anyone that that'll benefit, enable notifications. That means a lot to us, to get you guys the information, the knowledge. So, and again, like I said, if you guys have any questions, you can always call or text my office, 832-431-6331. We're open 7 days a week, from 9 a.m. to 7 p.m. Monday through Sunday. So appreciate all of you guys tuning in and watching the channel with us. So the first thing that I want to talk about tonight is the DSCR loan program. We've done a lot of episodes. We're one of the nation's #1 non-QM, non-qualified mortgage lenders in America. And the DSCR loan is a very popular loan program. It's taken America by storm. It's basically, you can buy rental properties, doing no documentation, no income, no employment, and you can accumulate as many single-family, multifamily properties as you want. And a lot of people bought their rental properties either before COVID or right after COVID, and they realized a massive equity appreciation, a massive spike in their property value. Okay, so, but they also got a low interest rate at that time too. So let's say you bought a rental property for $500,000, and now it's worth $900,000, and you owe $300,000, and you have like a 3% rate on your mortgage. Well, you're not going to really want to refinance to tap into all that equity. You may do that if you have to, but most people, smart money, are not going to do that because the rate is so low. So one of the things that's changed in a new product that we rolled out for June 2025 is a DSCR second lien Heloc. So the way that it works is, in this example, if you had a rental property that was worth $900,000 and you owed 300, well, then you have equity of 600,000. So with that, you can tap into that equity to and do future investments or whatever you want to do. So the second lien DSCR HELOC, the way that it works is, if you went up to, let's just say, 75% of 900,000, you'd have available equity. Let's just say 700,000 that you could tap into minus your first mortgage of 300. So you potentially have a second mortgage that you can tap into of $400,000 because you can't exceed 75% of the loan to value. So, or a loan of 700,000 in this example. Um, so that means that you can get a second lien HELOC. You don't have to refinance the first, and you can get a second line of credit for 400,000 using the rental income to qualify you. Okay, so you don't need tax returns, you don't need W-2s, you don't need pay stubs. They're using the debt service to qualify you for the loan, and you can do a second mortgage, you can do a line of credit. There's a lot of different things that you can do. So if you have rents coming in, let's just say of $6,000 a month, and your mortgage payment is $3,000, because you bought the property so long ago, well, then you're netting profit of $3,000 a month. Okay, so if you're going to take out a second mortgage, you're going to have obviously a payment on that second mortgage, and that payment on 400,000 30-year fixed, the going rates right now are about 9%. Is going to be about $2,400 a month, right? So you add the first mortgage payment with the second mortgage payment, and you still need your debt service. That's why it's called a DSCR loan, to be 1-to-1. It doesn't have to be. We have programs that are less than 1, but ideally it'd be good if it was 1-to-1. And then from there, that's what's going to be used for the basis or the qualification for the loan. So it doesn't matter what your income is, what your employment is. They're using the cash flow of the subject rental property to qualify for this DSCR second lien HELOC. So it's an awesome product because you can tap into this equity, and you can take that $400,000 and you can invest that to go buy, apartment complexes. You could build, do fix and flip. You can do multifamily. You can do Airbnb. You can buy more long-term rentals if you'd like to. You can buy commercial. So there's a lot of different things that you can do. So it makes it very exciting because now, from this equity that you've created, you can, you might have had a $900,000 portfolio, and you can take that 400,000 and then create it into a $2 million portfolio, and just keep growing and growing and growing to make it bigger and bigger. That's the whole, name of the game of what we're trying to do, right? Questions? Anybody? Anyone have any questions about how that works? If you have any questions, let me know down below. I'm happy to answer any questions that you have about how this product works. And it's available nationwide. You do have to have a 680 or higher credit score for this. There is no prepayment penalty. You do not have to pay off your first mortgage. If you do a loan below $250,000, you do not need an appraisal. If the loan's over $250,000, you will need an appraisal. It takes about 3 weeks to process and close the loan. We're talking about tonight the DSCR HELOC, the new program that we rolled out for June 2025. So we talked a lot about the DSCR loan. This is a second lien mortgage HELOC behind your first mortgage. It's called the DSCR loan. And you can do a second behind the first to tap into your equity on your rental property to purchase, do whatever you want, invest, build, grow. And this is how a lot of my investors scale up their portfolio, how they grow. They take it from, one property to 3 properties, to 5 properties to 10 properties is, starting with one, however you got that property, whether you bought it as a foreclosure, as a family inheritance, or you just built it if you're a builder. A lot of people right now are building, doing ground up construction to build rental properties, but creating that value, that equity, and then taking that equity to do future investments, and then growing your portfolio is a great way to create passive income for you, for your family. JP, what is the max LTV for this? You can go up to 75%. So yeah, you can go up to 75 for rental property. And then for a primary, we also have for a primary residence too, you can go up to 90%. The rates are between 8 to 9%, 30-year fixed. And then you can also do interest only too if you want to. So yeah, it's a cool product because it allows you to tap into, and like I said, you don't have to have a job. There's no income check. There's no employment check. Great program that we just rolled out to help all you investors out there. And then, like I said, if you have a primary home too, you can also do it on a primary home up to 90% of the value. The first lien HELOC. Well, yeah, it's just basically the same thing. It's just that if you have a first lien on the property, that would get paid off. Now there's different type of first lien HELOCs. There's some that come with a sweep account, and where your account is swept daily, and that basically reduces the compound or the interest that's against your mortgage. For example, so let's just say that you didn't have a mortgage on your house and the property was worth 500,000, and you took out a first lien HELOC for 400,000. It comes with a bank account linked to that mortgage, and your payment would be ACH daily based on how much money you have in the account and swept against. They are clearing so much land. I road 1,200 condos. Wow, yeah. I mean, that's happening everywhere. Yeah. I'm not surprised about, yeah, they're building stuff everywhere right now. But basically, so the first lien HELOC is every single day, the money that's in your account is swept against that loan. So if you have 5,000 in the account, that goes straight to the loan daily. So the loan recasts daily on the interest. So you have a very low effective interest rate. So it's a very good program. And then if you have access to the funds on demand, if you ever need those funds, some people, it takes time to really understand how the loan works. But once you do, it's a great product. A lot of people are scared because the money is being taken out of your account every day, but you can pull it right back into your account with a transfer, ACH. But it's a really, really cool product. So now on the first lien HELOC though, it is a little bit different. It's not DSCR, it's not no doc. It does require income verification. So they will verify your income. You also have to have a 720 or higher credit score. And your debt ratio maximum is 41%. So it is a little bit different on the qualifications and the requirements. It still is a really good loan program though. But like I said, a lot of people are doing a lot of my like we deal with 40% of our clients are investors and entrepreneurs. What are the qualifications? The biggest qualification for DSCR, if it's long-term financing, the property has to be habitable. So it's not for like a fixer upper or rehab. The other thing is that they want to see that ideally that you own your own primary residence, and that that you have at least experience in doing property management. Obviously, we do first time investors. The biggest thing is that there's going to be more requirements if you are a first time investor. You might have to put more money down. They may need more reserves. So, like, the thing about doing 15% down, you have to be a seasoned investor, at least manage one property, and have a higher credit score, like a 720 or higher, versus, if you just started the business and this is your first one, you may have to put 20% down. The other thing that's really important on a DSCR loan, obviously the name of the product is debt service coverage ratio, is that it has to be able to support the mortgage payment. So like if your payment's $1,900 a month, remember, they're not doing any personal income check on you, on how much money you make personally. So the rents that are coming in have to be greater than or equal to the payment. Okay. So if you're paying $1,900 a month for this property, then you have to be collecting $1,900 a month or more. If you're only collecting $600, then it's negative cash flow, and then the lender is not going to want to do the loan. So those are the main requirements. Yes, you can use your 401k. JP's asking, can you use your 401k? Shows your yes. As long as it's a liquid account, then you can get up to 60% credit for your 401k. You can't get 100%, but you can get 60%. Anyone else, any questions? That's right, 60% of the value. That's right, JP. So if you had 100,000 in the 401k, they're going to give you credit for 60,000 for reserves or down payment. They won't give you 100% value. Yeah. So yeah, it's really good info because see, this is the thing that with um, you know, what we preach, a very important thing is to create passive income. I don't believe Social Security is going to be able to take care of us. Job security is, unknown. It's fickle. Real estate is stable, and people are always going to need a place to live. And if you're investing in good real estate, then you'll always be able to create income and value. So, the thing that if you look at historically, real estate has appreciated in the last 100 years on average, 3.5%. And I mean, the last 5 years in some states, 40, 50%. So if you're trying to figure out how to get out of the rat race and build a portfolio, make a good retirement, a good living, rental properties is a great way to do that, whether it's short-term rentals, long-term rentals. But, I mean, let's be realistic about, like, can we actually live off of Social Security? And did you make a fortune in your career? A lot of people haven't. And so if you had, 10 rental properties, if you're making, $8,000 a month on those 10 rental properties, that's better than nothing. So why not start now and start building that? If you were making $8,000 a month net income, that's $96,000 a year for you to live off. Now, I mean, depending on what your goals are, what your expectations are, what your requirements, you might need to make 100,000 a month. I don't know. It's all based on how big you want to scale it. But real estate is very stable. So it's not like the stock market where the prices change every day. The whole thing about what we're talking about is building passive income, so that way you can enjoy your life and not have to spend so much time in the rat race, the hamster wheel, and you can have a better quality of life. So these are the products that we offer as a direct lender. to help people to take their life, to the next level so they can become financially free and do the things they want to do with their loved ones. Because life is short, and you want to, enjoy what you can, and real estate allows you to do that. And we offer those products for people that are interested to build a real estate portfolio. So if we can help you, like I said, with anything, please don't be a stranger. Reach out to my office. We're here as a direct nationwide lender. We really appreciate all of your help and your support. Please don't forget to enable notifications, subscribe, like that bell, share this with anyone that you know that can get value. We also have our real estate university. If you want more information, the links are down below for the real estate university. I will, JP. Thank you, man. We do it twice a week. So I hope this was a good one for you guys. We have a bunch of other live streams that we've done. You can see on the channel. Please give us a call, text us if we can help you with anything. 832-431-6331. We'll see you guys next week. If you need anything else, just let us know. Take care. Peace out. Stay strong, everyone. We'll talk to you soon. Bye-bye.